Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside. Like Riot Blockchain before it shot up 10,090%, Digital Turbine before it shot up 789%, Overstock.com before it shot up 1,050%. This power gauge comes from the legendary Mark Chaikin. Right now, you can get a free in-depth look at how his power gauge system works. A way to type in any of 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugepreview.com for a free look. Again, that's powergaugepreview.com. Welcome to Making Money. This is Matt McCall. Thanks for joining me. It is the last day of the first quarter, March 31st, 2022. It is a Thursday. We get a big show. I promised I was going to go over the last quarter look ahead. I'm going to push that to Tuesday because I have a lot more work I'm going to do in that. And a lot of big news came out yesterday we're going to talk about. We're going to talk about the inversion of the 210, the yield curve. I'm going to explain that, what it means for you. You might think it's bad, but it's actually a really good thing if you're in the stock market. We're going to talk about an order that President Biden put in yesterday, kind of under the radar. Really good for some of our stocks, really good for a lot of things we've talked about. Very important, lithium, rare earth minerals, all coming up. And the top innovative companies, according to TIME, the top 100 companies. We're going to break them down. Again, we have some of those companies. They mirror our themes. All very important. Great show ahead coming up right now on Making Money. Welcome again. This is Matt McCall. Thanks for joining me here at Making Money. It is the last day of the first quarter. I feel like it was just New Year's Eve just a couple days ago. The first 3 months flew by. We had to deal with quite a bit here in the world, from COVID still kind of wreaking havoc in the beginning of the quarter in January, to a war going on in Ukraine, Russia attacking the country, to yield curves inverting, which I'm going to talk about in a moment. We have inflation at 40-year highs. We have interest rates, the Fed making its first move in several years. We had to deal with a lot in the last 3 months. But you know what? We've held up pretty darn well when you look at the stock market. So that being said, let's jump in and look at the S&P 500 right now where we are today. We're about an hour into trading here, and the S&P is down about 0.3%. And I don't want to harp on this chart too much, but I'd like to show just where we are every show. As you can see, we broke out to a multi-month high. That was on Tuesday when we were doing the show. Pulled back a little yesterday, down a little today. But again, look at this big run, folks, that we had. This little consolidation / pullback is very healthy because nothing goes straight up. So if we consolidate in this area on the SPYs, which tracks the S&P 500, between 450 and 457 and change where it is right now, that's actually a really positive sign. And this blue line, this red line, that's the 200-day and the 50-day moving average respectively, hanging above there is also a very good sign going forward. So where we're sitting right now, I like what I see in the markets. I want to pull up a chart here really quick, though. I think it's important. And this chart here is the 10 to 2-year Treasury yield spread. And what this takes is it takes the yield on a 10-year Treasury. And right now we're sitting around 2.3 and change. And with the 3-year, we're actually right there. The 2-year right there as well. But the difference is only 0.04%. Meaning, if you buy a bond from the U.S. government, a 10-year versus a 2-year, locking in for 10 years versus 2 years only pays you about 0.04 difference for locking in 8 more years. You can see how that yield has come down in the last year or so, or that difference, that spread. And what that typically will tell us is there's a recession on the horizon. And you probably saw the media talking about the inversion of the 10-2. Now that's what I'll call it, the 10-year and the 2-year Treasury yield. And they go directly to, there's a recession coming. This is a great predictor of a recession in the future. And historically speaking, it is a pretty darn good indicator of a recession coming around the corner. What they really forget to tell you, I don't know if that's out of trying to get headlines or not, or maybe they're just uneducated, that typically the stock market rallies big. I mean big. In the 18 months after the yield curve inverts. So for the next 18 months, the next year and a half, historically speaking, we should see the stock market rally big. I'm not saying 5, 6%. I'm talking 30% plus, putting us in well into new high territory. I talked about this on Tuesday. The market's only down about 3 to 4% from an all-time high. If we can rally 30% from here, that's a massive rally in the next 18 months and a major, major breakout for stocks. And I believe that's where we're headed. Regardless of what happened with the yield curve here this week, I thought we were going there anyway, but this indicator just kind of reassures us that we're setting up right now for a great buying opportunity in stocks, and we should all be invested looking for this rally. So what I want to do here is take a look at the returns since that time. Look at this chart. I got this from LPL Research. Ryan Dietrich over there puts together some great numbers. This shows yield curve inversions going back the last 4 times to 1988. As you can see here, it shows the return on the S&P between when it inverts and the month when the market peaked before it started pulling back. Well, the average is about 17.1 months. The median is 20.2 months. So I called it 18. And if you go back further and look at the last 7 or 8, it's about 18 months. So it stays consistent. So you're about a year and a half out till the market peaks. But what's fantastic here is the average gain just over the last 4 times, 28.8%. And this, again, goes back to 88, 98, 2005, and then, of course, in 2019, and the recession that was brought on by COVID, even between that time frame of August 2019 just to February of 2020, 5.8 months, folks, 18% gain. So again, I like to look back in history because even though people will say to me, this time is different. Of course, we live in a different world now than we do in 1988. You know, we didn't have the little cell phones and connected to the world everywhere we go. So yes, things are different. But as I always say, psychologically, humans are the same. So a lot of times what we're seeing here is driven by psychology and driven by outside factors, not just the stock market, not just what's going on in the world. And that is why I believe history does repeat itself in a bit of a different way, but it does repeat itself. You know, it has been a very good tool, as I mentioned, the inverted yield curve. However, if we look at another yield curve, which I'm going to show you in a moment, which is the 10-year versus the 3-month, it's actually a little bit of a better indicator. And when I pull that chart up, as I'm about to show you here, we're nowhere near breaking down below that inverted yield curve. There's still a difference of 1.8%. It did invert, back here in 2019, around the same time that we saw the 210 prior, but this time we're still up there. So we may not see that inversion for quite some time. There's a big difference that has to come from there. And if I go back behind just the last 4 that occurred, we had one occur in 1980, we had one in 1978, one in 73, and one in 65. So now we're going back, folks, about 60 years or so, nearly 60 years. And again, the average time from the inversion to the S&P peak over those last 7 instances is 18 months. So it falls in line with everything I talked about. And the average month from the inversion to a recession happening in the country, also 18 months. And the average gain there, it drops a little bit because we had a couple small ones back in the 70s and 60s, and that average gain is nearly 20%. So either way you cut it, 20 to 30% or so is one hell of a rally from here. And an inversion of the yield curve is typically when the investors expect that the longer-term rates to be below these near-term rates. That's why we see that. And again, a lot of times that is an indication of an economic slowdown. And GDP is still supposed to be very high growth this year, and it might slow down next year. But I still think the chance of a recession right now is really not that high. So I'm going to not jump on this recession train as of yet. I just don't think we're there. But if we look at that 2 to 10 that we're looking at, it preceded all 6 recessions since 1978. There was one false positive when it actually inverted, but we didn't see a recession after that. But as I mentioned, a 3 to 10 I just showed you is a little bit of a better indicator. But again, we are not there yet. And, maybe that's because of the Fed. What's going on in the Fed? We haven't seen a 3 to 10 change yet. But that is something where, to me, it's I like highlighting this because it is extremely important. But at the same time, don't freak out because in reality, again, this tells us we should be buying stocks if we don't own them already. And I think we're sitting at a really nice place right now. And as of the last check, the 10 years at 2.34%, The 2 years 2.32, so it's 0.02. So we're right around that flat line right now. And just to kind of throw something fun in there, the month of April starts tomorrow, obviously. Today's the 31st. When you look at the last 16 Aprils, the stock market was up 15 of 16 times. That's fascinating. One of the best months of the year. The only down year is 2012. We're only down 0.7%. The average gain in a month of April over the last 16 years is 3.1%. When you consider the average gain in the S&P over the last 70 to 100 years, monthly is about 8 to 9%. That's about a third of the gains in just 1 month. So the little consolidation pullback we've seen in the market in the last couple of days could be setting up for a really nice April with all the indicators and all the history that I've seen here. And I think we're looking good. I think we're really setting up for what can be a really nice April, even more importantly, longer term. Because, for me, obviously, longer term investor, that's more important. And right now, we could have more of a pullback. We could have some volatility. Something can happen in Ukraine we're not thinking about. A lot of things can happen. But again, long term, right now, I'm still extremely bullish, and I think there's a lot of stocks that are still looking very attractive. A lot are off their lows, still looking very attractive. So that's where we stand on stocks right now, and that's where we stand on a yield curve. I wanted to get that out there because I know it's been a headline that a lot of people are talking about, especially in the office here. Other people coming up to me and asking me. Bitcoin, real quick, I talked about the breakout last week, and then it broke over the weekend above the 45,000 resistance level. We're still hanging above there. We've drifted down about 1% in the last 24 hours. We're at 46,500 right now. But again, when you break out above a resistance level, folks, you don't always go straight up. A lot of times you consolidate and even pull back a little bit and retest that resistance level. Because when you break through resistance on the charts, technical analysis, you can call it, that does what we call a role reversal. So imagine in this room right now in the studio, that ceiling is resistance. But when you push yourself through that ceiling, what do? You land on the next floor. This instance would be the roof. You land on the roof. That former resistance, a ceiling, is now a floor up there. So the same thing with this. When you break above 45,000, that now does a role reversal, and that's now our support. So we would like to see Bitcoin, obviously, hang above that 45,000 level. If we consolidate above there for a little bit, that's fine. And it's not perfect. It might pull back to 44,500 and come back. Nothing's perfect. It's a little bit of a gray area when it comes to technical analysis, but we're looking at the bigger trends and what's going on. So right now, again, looking at the ceiling breaking out, we're holding above that. We're standing on the roof, and it still looks really good for Bitcoin where we are sitting here right now. Something fun I want to talk about. We're going to talk about some rare earth minerals and lithium and a big announcement of President Biden yesterday. We get to that in a minute. But what I'd like to talk about is Time comes out with its 100 innovative companies every year. And it came out yesterday, at least that's when it came across my desk. And I went through it yesterday and more this morning. And I'm going to pull up just a couple companies here. Some are publicly traded, some are not. But I want to talk about this list. And they break it down into some different categories. The first category they talk about is what they call pioneers. And some of the companies in there really caught my eye. One is OpenSea, OPENSEA, as in sea, as in water. And this is a company where it allows you to go buy and sell NFTs, non-fungible tokens, which were really hot last year, and they kind of fell out of favor a little bit. But again, when you're so early on in such an amazing new trend, you will see a lot of hype at first, and then it dies down, and it comes back. We saw the Bitcoin over the last 10 years or so, not even quite 10 years, but you see it, it's in the news, it's big, everybody's talking about it, then it falls out of favor. And then it's in the news more, and it falls out of favor. That is a typical pattern you see with early stage companies. So OpenSea, not publicly traded, but one that I thought was fascinating on there. Another company on there called Rec Room, R-E-C, Room. It's a virtual playground. So you're talking about the metaverse, which is something that we talk about a lot. And then another company called Together Labs, another private company. This does metaverse money. Again, following in line with a lot of stuff we talk about. One I thought was pretty interesting called Astroscale. And their job is to trap space junk. And that sounds kind of funny. It's like, what do you mean by space junk? There's a lot of stuff flying around in orbit right now. And we're going to continue to put more and more satellites up there. As we see SpaceX and other companies, Virgin, launching more satellites into space. We saw in the Ukraine situation where Elon Musk moved the satellites over there to help people in Ukraine gain access to the internet, which was taken out by the Russian troops, a lot of them. So it's allowed people to connect. So that's really, really a cool trend. I don't talk about space as much. I will more over time. I only have so much time to talk about so many trends, but that is a trend that's on my radar as well. A couple other companies that are on there. Sandbox. This is a company that is in the metaverse as well, virtual land, which is fantastic. Oxford Nanopore Technologies. They deal with genetics. Again, another company that you want to keep an eye on. And to me, genetics is a huge upside potential. And this company does trade publicly over the counter, so it doesn't trade much. I don't even want to show the chart because it's kind of choppy. Another one that trades here into a recent IPO, this is IonQ, and I will pull up the chart of this for you. Here's a chart of IonQ. This deals with quantum computing, which is kind of the next iteration of very fast computing. It's still, again, in the early stages. So this was a SPAC. So it was around at $10. It rallied on news, then fell off with a lot of SPAC sell-off. Then it rallied big when the deal went through up to about $36, back down below 10. It's kind of been in no man's land here, about 12.88 today, up about 4%. But this, to me, is one of the clear leaders in quantum computing, but it's still very early. So you will see a lot of volatility in a company such as IonQ. Another category that Time puts out is they call it the Titans. So these are going to be some of the big names that you already know. A lot of them are publicly traded companies, but these are going to be companies that are still changing the world. Everything from Amazon, Pfizer's on there, obviously, with the breakthrough they had with the vaccine. Alphabet, which is Google, is on there. Ford is on there for EVs. Meta, which is the old Facebook, is on there. Microsoft, Apple. One company I do want to show you, this is a company that I've been following for a long time. One of my favorite long-term plays. Here's a chart of it. It's called NVIDIA. I'm sure you've heard of it. One of the leaders in chips, very large company. Symbol is NVDA. You can see back here it hit an all-time high in November. Then we pulled back a bit with all the growth stocks. Now we're back up to around 279. This is like a core holding to me. This is a stock that is just, it's in so many different things. It's in gaming, it's in blockchain, it's in graphics, it's in artificial intelligence. Really, almost every one of our big trends. It's they do chips for autonomous vehicles, electric vehicles. So what's nice about NVIDIA is you really get to get exposure to many hyper growth trends, mega trends that are out there through a purchase of one stock. So that's what makes that so fascinating to me. So those are the Titans that kind of made my list. Another category that they look at, they call them leaders. And a few that are on here that caught my eye. One is EV Connect, and that's connecting, as you can imagine, EVs. Another one that is publicly traded here. Here's a chart here of Upwork. As you can see, this was a really hot chart. I'll pull this out a little bit. This helps people basically get jobs, kind of job placement, but more online. Went public back in 2018, didn't do much, and really was a laggard for a while, and then it kind of took off. But we've had quite a bit of a pullback, as you can see. And today down slightly, but just off these lows. This is a company you want to keep an eye on. Again, still early stages, but one that I think you want to keep an eye on. Another one is Calm, C-A-L-M. And this is really a kind of an online mental health app, and connects you and helps you when it comes to that. I have the app actually on my phone. It's fascinating, and I think mental health is something that has become more okay to talk about. More athletes, more celebrities talking about it, so it makes it a little bit more okay. Successful people in business, maybe friends and family. I have firsthand knowledge of it, and it's something that over the pandemic has made things very difficult on people. It really has accentuated the problem we have, not only here in the United States, but worldwide. So we're going to see a lot more apps and businesses that really focus on that, and there's a huge need for it. There's not enough therapists and psychiatrists out there right now, so hopefully we will see more help for people that need it out there. And it wouldn't be such a stigma to come out and say you have mental health issues, because so many people do, and it's nice to see people actually coming out supporting others. So Calm, to me, is a company that is doing really well here for the world. The next one might be really in the headlines coming up, and I'll pull up the chart for you. Publicly traded, this is Curaleaf, and this is a marijuana company, cannabis. And there's a vote that may go to the floor as early as tomorrow, Friday, to legalize marijuana at the federal level. I know I've talked about this a lot. We've had bills come and go. This one might actually get passed. This would be a game changer for the U.S.-based, which this is, multi-state operators. They call them MSOs. Cureleaf is one of them. The stocks have been just struggling. You see bounces here and there when they talk about the potential of it getting passed. But again, it's just it has struggled, and people ask me, because I was a very early investor in cannabis before most of these companies were even public. I always tell stories speaking and moderating panels on cannabis companies. When some of these large multi-billion-dollar companies were private and not worth much, they had a few employees. Now multi-billion-dollar companies couldn't get people in the seat to talk about it. And now, legal obviously in Canada for quite some time. We're seeing medically legal and even recreational legal in a lot of states. And I think it's due for the federal level to legalize it, and it will happen. It's just they're dragging their feet, and it comes down to money. It comes down to politics, basically, folks. But Cureleaf is one of the leaders in the United States, and if you like it, that's one I think that you want to keep an eye on. Another company that trades overseas is Ørsted, O-R-S-T-E-D. It's a Scandinavian company, and they are one of the leaders in wind energy. So wind power, to me, along with solar will be leaders going forward. So that's one I think you want to keep an eye on as well. Again, it trades overseas. Balenciaga's in here. That's a high-end brand. You see the funny shoes they have. A lot of celebrities wear them. That's pretty fascinating because they're kind of changing the trends when it comes to fashion. Reddit made the list, and we all know Reddit, very famous for Wall Street bets and the meme stocks. They have a plan to go public, so they will be publicly traded soon. It all goes well. Sotheby's made the list as well. And Sotheby's, obviously the big auction house, used to be a publicly traded company, not anymore. Sotheby's made the list because they're doing a lot of digital art, kind of NFT stuff. So they're a bit of an innovator when it comes to that. You wouldn't think they would be, but they are. DoorDash is on here as well, and that is the delivery company. And that symbol is Dash, D-A-S-H. You see charts all over the place. A lot of these high-growth, innovative stocks have gotten crushed. But what you have to keep in mind here, just like DoorDash and a lot of others I'll show you in here, some that aren't even on the list, these are still the leaders of the future. They're not all going to work out. They're not going to be 100%, but all you need is a couple of these stocks, folks, in your portfolio. And you always want to be heavily diversified. And again, nothing here is a buy or sell recommendation. But you want to be heavily diversified into these innovative growth companies with other stuff too. You can have minerals in there, whatever it might be. You want to have some more boring companies, more power to you. But you do want to have exposure to companies that are changing the future now and will be the leaders of the future. So keep that in mind. Another group they call innovators. And the first one on the list is a company that went public not too long ago. And this is Rivian, R-I-V-N. This is the truck, the big electric vehicle truck. And they're crazy cool looking. Our head of marketing, I sat next to him in an all-day meeting yesterday, and he has one that's supposed to be delivered June or July timeframe. And the price isn't that bad. It's obviously expensive for a truck. He's getting the SUV. But he showed how they can make this crazy turn, the way the wheels move. They can basically go in circles. Kind of like all the motorheads used to do in my town and go do donuts in the parking lot of the Super Fresh. So you just kind of do it yourself. I thought that was fascinating. And it's definitely a company that you want to keep an eye on. I'm not saying the valuation's right or wrong here, but again, this could be a clear leader. And if you remember Rivian, they are a company that has a deal with Amazon. So they're making delivery trucks for Amazon. So they do have that, which gives it a big upside. SoFi, which is a company, again, publicly traded, symbols SOFI. You can see the chart here. This is a company that is really fintech, next generation for finance, and doing a great job, recently public, one to put on the list. Moderna, which was one of the companies that came out with the vaccine, obviously, that's why they were in the news. But they're an mRNA company. And mRNA, regardless of what you think about it, I think it's here to stay. And I think we're going to see a lot of drugs created from that technology. And Moderna being a leader, obviously that is why they made that list. A couple others, No Traffic. I had not heard of the company until I did a little research on it, but this will really basically help with smart cities going forward, really. And when I say smart cities, everything's going to be connected. We're going to have autonomous vehicles, so that helps with no traffic, obviously. So it's a pretty cool name. Another company on the list is Klarna, K-L-A-R-N-A. This is what they call a BNPL, buy now, pay later. So when you go buy things on the internet, a lot of times you'll see Klarna or Affirmed or a few others out there. If you want to break the payments, usually it's into 4 different payments. So if it's $100, 4 interest-free payments of $25 as long as you pay it on time. And which is nice because it gives people the ability to kind of buy something on credit, but without taking on any interest as long as you pay it off. And if you do that, please make sure you make the payments. Otherwise, they're going to whack you with interest, and it doesn't make any sense to do that. Two more on the innovator list. Athletic Brewing Company. I'd never heard of it. Again, I was sitting next to people yesterday in the meeting. I was going through this list, and somebody mentioned that they had a friend who stopped drinking years ago, but liked to taste the beer. So he drank O'Doul's and that crap. It doesn't taste very good. But Athletic Brewing Company makes like 70-calorie beers, and they taste like, apparently, no alcohol. Tastes just like IPAs. So they kind of they go after, a lot of people, they go on a nice bike ride or a hike, and you want to come back on a cold beer. It's for people that don't want to have alcohol, which I never really was a guy who worked out and wanted a beer afterwards. When I work out, I feel good. Give me some water, give me some sun, maybe jump in a hot tub. But I don't want alcohol personally. But a lot of people do, and this is a nice way to have that kind of taste and join in the fun and have somewhat healthy drink and not have to worry about obviously putting alcohol in your system. And the last one I want to talk about on this list is a company that went public recently as well. This went public in November of last year. As you can see the chart here of Allbirds, symbol bird, BIRD. It went public in November, rallied up to a little low 30s, now down to 6. So it has not done too well at all. I will say I had a pair of Allbirds and super comfortable. I mean, they're not cheap, but they're not that expensive. People tend to love them, and they're expanding into other clothing right now. And a lot of times I see these companies do this when they become very popular. And they're kind of a niche, like this one was shoes, like sneakers. And suddenly they start doing other types of apparel. They hit a bit of a speed bump because they kind of get out of their niche that they're really good at. But Allbirds is on here because they are changing, fashion a bit. So I see why it made the list. And the last group is what they call disruptors. So on here, TikTok. We all know TikTok, obviously. Skims made it, and that's Kim Kardashian's kind of clothing line that she's came out recently. She's been all over promoting it. Another one is Thrive Market. So they do delivery of healthy food. I've actually done it before. Very nice if you eat healthy and they deliver. And a lot of people have their food delivered these days. A couple others, Good RX, which is a publicly traded company. And this is basically like a pharmacy. And you can get your drugs and your medicine through here. And this company's been up and down because there's always fears that Amazon's going to move into this really big into delivering prescriptions and medicine, that it's going to hurt everybody else that's involved in it. And that may be true. But GoodRx, man, it's got hit here in February, as you can see in the chart. It's come back a little bit. I think I have to agree with Time. I think this is something that is really changing the narrative of how you get your prescriptions and drugs if you're sick and go pick them up. And the last one I'm talking about on this list is they call it Contemporary Amperex Technology Company. It's known as basically CATL. It is the largest battery company in the world. And it has about a third of the market share for all EV, electric vehicle batteries. Based in China, you can't buy it here. You have to buy it on the Shenzhen index, which, if depending on where you have your brokerage account, it's pretty easy. Interactive Brokers is what I use for my international, and it's usually rated the top brokerage firm for retail investors to buy international stocks that trade outside, not trading at all here on U.S. exchanges. So you can look at that, and not promoting that, but that's just what I use, and it's usually heavily rated high when Barron's does their annual broker ratings. So that is a pretty interesting list, and again, that's just 10% of them or so. But it just shows how many of our trends are on there. There's even more that are on there as well of our trends that make that. So the last thing I want to talk about here before we wrap today, and this is really important. The White House came out yesterday. Joe Biden came out and said that he plans to invoke some powers that came to in the Cold War. And it's called the 1950 Defense Protection Act, the DPA. And what he's going to do is he's going to add battery materials to the list. And I'll tell you what it means, but let me give you examples of how this happened in the past. Back in the 50s, Harry Truman, president at the time, he did this for steel during the Korean War. Donald Trump did this recently for mask production, masks for coronavirus, obviously. So what this really is going to say is it gives the government this power to really help this industry, whatever the industry it is. This happens to be battery materials, to help this industry push forward, and it shows us that we're in big need of it, and we're relying on outside countries for it, and it could become a security issue, a national security issue. And I think this is true. And so you saw shares of MP Materials, which is the only rare earth mineral miner in the United States right now, went public recently. And that obviously was up on the news. Let me show you the stock here. And MP is a symbol. As you can see, yesterday hit a new all-time high intraday. If we close here today, it's up another 4%. It'd be the best close ever. Breaking out, and you're not seeing a lot of companies break out right now, so that's done real well. There's two other lithium companies because lithium will be on this list as well, that also did well yesterday. This is Lithium Americas. They have a project in Nevada. As you can see, big rally yesterday, follow through today. Then we have Piedmont Lithium, which also was up yesterday as well. And the symbol of that is PLL, and it's at a multi-month high as well. And they have a project in North Carolina, obviously, for lithium. I've talked a lot about this on the show. I've talked a lot about this to my subscribers directly. We've recommended several companies. Just last week, we came out with a brand new portfolio of 4 stocks that go after batteries for us, and some direct exposure to really what President Biden came out with yesterday, and will really help this. What we need to remember is we rely on China heavily. And when I say heavily, I mean heavily. We rely on China for majority of our rare earth minerals that are needed not only for batteries, for electric vehicles, batteries for technology, all types of anything that's being electrified. And we are in a mass movement right now to electrify everything. Obviously, a EV battery is much bigger than something that goes in a cell phone or something else. They're also needed for magnets, which are very important to do a lot of defense products, which again, national security. So there is a very, very big importance of securing this supply chain. And it was highlighted during the pandemic. It was highlighted during the little trade war, whatever spat we had with China when Donald Trump was president, because they started holding back some of these rare earth minerals because they are either mining or refining over 80% of them. And they're using a lot of them because they have a huge EV market, the biggest in the world by far. And obviously, that could be a bargaining chip if for some reason we get into a trade war with China. It could be a bargaining chip if something happens where China backs Russia and we have some type of escalated conflict. They have a huge bargaining chip. We need these materials. So with this being said, some of the materials being added or minerals be lithium, nickel, graphite, cobalt, manganese. And what this is going to do, it's going to help these mining companies have access to about $750 million under the DPA, the Title III fund portion of it, which is the Defense Production Act, as I just mentioned. They also said they might have the recycling of battery materials here because we have a lot of batteries here. Why not recycle them here in North America and pull those minerals out and reuse them? I mean, that's something we've always done with batteries, so that's going to be really extremely important as well. It also paves a way to allow Congress to allocate more money. Obviously, it has to get passed through Congress, but that's important as well. The Biden administration already allocated really a lot of money to this, including $6 billion as part of the infrastructure bill. And again, this is to really get down our supply chain when it comes to minerals needed for batteries. And batteries may sound very boring to you, but it's one of the greatest investments that we've done over the last couple of years. And I still think we're very early on in that process. And not only the mining of it, you have to be able to process it as well here on the here in the U.S. So they're going to be putting money into that. There's a couple other companies, actually a company I own personally as a big processor. And I've been in this. I'm going to continue to be in it. But this is a really, really cool fact here, that the number of mineral commodities, not including fuels like gas or anything like that, that here in the U.S., that we are currently relying on for over a quarter of our demand, so over 25% of what we need comes from outside, has jumped to 58 products versus 21 in 1954. That is a supply chain issue, folks. You know, back in the day in the 70s and 80s, we were a big producer of rare earth minerals and a lot of the things we need right now when it comes to batteries. But then China came in They flooded the market, lowered prices, put a lot of companies in the United States out of business, and then they took over the corner of the market. I mean, be mad at them, be whatever. It was a nice business move. It doesn't hurt. It doesn't help us, but it was a nice business move. But now we need to get back and get our minds up and running, get our processing here, and not rely on other people that may or may not like us. The problem we're running into with this is obviously it's not the cleanest process to get rare earth minerals out and then process them. You have the climate change advocates out there, all types of environmental groups, indigenous groups, because it might be on land of indigenous people, and it could obviously potentially contaminate water. And we don't want that to happen. So hopefully come up with processes that are a little bit better. But it's something that I believe we really, really need to push through. And it's something that I think we will push through. And again, these are the types of trends I look for, folks. Look at the trend of electric vehicles. We know there's going to be a lot more electric vehicles on the roads going forward. Right now, give or take, about 3% of the new car sales in the United States are EVs. Only 3%. When you have the goals that the governments have around the world, the goals of certain companies to lower their exposure to climate change, the goals of companies just to go 100% EVs by the end of the decade, by the end of the roaring 2020s, the only way we do that is get a lot more electric vehicles on the road. And just think about the size of the batteries in an electric vehicle versus the size of most batteries that we have in little devices and products that we have today. The demand is going to be huge. The only way to meet that is to get supply increased. And to do that, we need to be reliant on ourselves. This country, most countries need to be. So we're going to see huge investment in the rare earth minerals, huge investment into lithium. And this, to me, is going to create amazing opportunities over the next 10 years. They don't go straight up. Nothing goes straight up. They've had a bit of a run recently, but I think there's great opportunity in riding this trend. This is a secondary play on one of the most confident trends, one of the trends I'm the most confident in right now, which is the continued emergence of electric vehicles. We cannot ignore this trend, folks. So I hope you liked the show. We have the S&P down right now, fractionally down less than 0.1%. So again, this consolidation, slight pullback that we've seen after the big run-up is extremely healthy. We're about to enter the second quarter. We're about to enter the month of April. I told you it was up 15 in the last 16 years, average gain 3.1%. So on the next show, which is Tuesday, I'll do the recap of the quarter and we'll look ahead. We'll give you some stock ideas. We'll add to your watch list. We're going to have a great show. But I wanted to talk about this today because it was so important to talk about the inversion of the yield curve. It was so important to talk about the move that Biden made yesterday with the DPA, Defense Protection Act, and the implications that it has on your portfolio or potentially could have on your portfolio. So again, remember those three things here. Educate you, which I think we did today in a lot of different ways. Have fun. I hope you had fun seeing these charts and seeing some good things. And then number three, make money. A lot of stuff we shared here, I believe 100% wholeheartedly can help you make some good money. So again, thanks so much for watching. Have a great weekend. We'll be back Tuesday. Smile, have fun, be safe. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.